Hello everyone! This is part 2 of my DR and IDR concept. If you haven't watched the first video, I highly recommend you to watch it first. It's been a week now since I revealed this concept. I am thankful for all the messages I received, and I want to highlight one message especially. Dane Trades tested the rule I shared over the past 3 years, and the result was as I expected. Over 80% in all 3 equity indices. And this is not taking high impact news into consideration. Today I'm going to give you advanced insights and tips on how to use my DR concept to a degree where you will be able to potentially make 23% profit in a single trading session. But that's not all. I am also giving you overnight session DR and IDR so that you are able to trade with 88% probability for almost 23 hours. You will learn to create a target matrix, how to anticipate at 10:30 AM which side the market will most likely expand, and how to find high risk-reward trade setups. Once you watch this video, I handed you over a cheat code for the markets, which you will find nowhere else. So let's go. Advanced tip number 1. Once the DR is finished, look at the open price at 9:30 and compare it with the close price at 10:30. If there is a reasonable incline, you should be changing your bias slightly towards the long side, and of course vice versa if you see a decline. If there's not a noticeable difference, you should stick with the neutral bias or the bias you already had before the opening. In this example, we are having an almost 20 points difference, which signals us that we can look for a long entry. When I say slightly more to the long side, I mean a 60% long and 40% short bias. So you are leaning a bit more towards long entries, but short is still on the menu. Advanced tip number 2. We are taking a Fibonacci retracement from the IDR low to the IDR high with 0.5 step standard deviation to the upside and downside to create a target projection for the trading session. As you can already see, these projections are quite accurate and will help you to define entry points and exits. Here you can see my settings for the IDR projections. Advanced tip number 3. As soon the DR is finished, the IDR levels become super important for the trading session. If you spend some time watching price action with this model, you will see how the algo is playing around these levels. If you see a reaction at these levels into the direction of your bias, it's almost every time worth considering a trade entry. Let's say you would have a long bias for this day. The thought process would be the following. After reaching the low IDR, the algo showed clear signs of rising prices. Now you can reverse engineer. If the price action would close below the low IDR, then the conclusion would be that the DR high is the high of the day with 88% probability, and your long bias would be wrong. As your bias is long, it is more likely that the low DR is the low of the day, so you could directly enter after reaction at the low IDR with stop 2 ticks below the low DR. In this example, we already have a long bias because of the open and close difference I explained before. Together with the rejection from the low IDR, I would enter a long trade with stop 2 ticks below the low DR. Advanced tip number 4. This is about finding high probability targets for your trades without using any other model for it. Once price action goes above one side of the DR, it reaches the 0.5 standard deviation with extremely high probability, which gives you a low-hanging target for your profit taking. If you study ICT teachings, you will be amazed how well the target projections from the IDR and PD arrays work together. So I highly recommend using both in combination to maximize your profits. Based on what I just explained, this would be the trade you would have executed with a risk-reward ratio of 4.19 and a simple 0.5 target projection. I guess most of the traders would already call it a day at this point. If you would have followed my logic, you would also know that this trade had a very high probability. If this trade would have been stopped out, you would know that the long bias was wrong and you would need to wait for short setups. This is the same trade again, just with the first buy-side liquidity PD array based on ICT model, which would have netted you a whopping 5.71 risk-reward ratio. Note how the first buy-side liquidity PD array is matching the 1 standard deviation projection exactly to the tick. I guess that's just random, Price action presents another setup. After a nice retracement back to the 0.5 standard deviation, the algo shows again how precise it is working and starts to climb up. It is breaking structure, and after closing above the structure break, you could directly long with stop below the 0.5 standard deviation and target a new high and the 1.5 standard deviation level. Or in best ICT manner, switch down to a lower time frame and take a fair value gap entry with a tuned risk-reward ratio. Another high probability trade with 1.48 risk-reward ratio without switching into the lower time frames. That brings me to advanced tip number 5. Just because the rule is confirmed, it doesn't mean that you can't short anymore. If the price extended quite a bit into one direction, took buy-side liquidity and reached a PD array, you could potentially short a retracement. Just keep in mind that with an 88% probability, the market will retrace only into an internal sell-side liquidity or a fair value gap. So mind your targets if you want to short in such a scenario. Advanced tip number 6. After confirmation of the rule in one direction, the IDR high, the IDR low and the midpoint of the IDR become highly valuable points after retracements to look for entries into the confirmed direction again. If these levels are matching up with fair value gaps, discount and or internal sell-side liquidity, the already high probability becomes even higher. Note how the 61.8 retracement from the previous up move is syncing up with the high IDR. Again, you would be able to take a high probability entry. Everything lined up, fair value gap, discount and high IDR. Note how the candle body closes the fair value gap and immediately afterward the high IDR gets retaken. I also placed the entry for this trade so that you would have waited with your entry for this to happen and used a stop lower to even cover for the chance that price would wick down again into the small volume balance on the left side. Another 3.13 risk-reward ratio trade where you stack the probabilities in your favor. Moving on to the last advanced tip for this video, number 7. Even after the close of the regular session in New York at 4 p.m., the rule and the probabilities explained in my first video continue to be valid for the overnight session. That means for the overnight session, we can expect with 88% probability that there will be no close below the DR low. We can also anticipate that price action is more likely to expand to the upside. And now the big banger is coming. There is not only one DR during a trading day, there is a second DR in the overnight session. Wait, what did he just say? If you liked the video so far, leave a like and a comment. Subscribe to my channel, and if you agree that the information in this video is amazing, please share it with every trader you know. My goal is to help as many traders in the world as I can reach. Follow me on Twitter to stay updated all the time. So what I didn't tell you in my first video was that there is another DR in the overnight session. This DR is from 3 a.m. until 4 a.m. New York time, and it's called ODR and OIDR. The overnight DR is used to set the parameters of the algo for the European trading session until the opening of the pre-market in New York at 8:30 a.m. Most of the time, the ODR is aligned with what we have already seen in the regular DR. The same rules and logic explained in my first video about the regular session apply for the overnight DR and IDR. Like I already said, normally the overnight DR will confirm what was already confirmed in the regular trading session and will offer you once again extremely high probability trade setups. Let's dive into it. We are using again a logical and probability stacking approach after what I just explained. We know that the regular session rules will apply overnight too. And we just figured that another DR is forming between 3 and 4 a.m. New York time. After the usual consolidation during the Asian session and the start of the overnight DR, the market takes out 2 times internal sell-side liquidity, returns into a fair value gap in discount. So we enter directly with stop below the 0.5 standard deviation level. The target will be a new high and next standard deviation at 2.5. Even better would be to combine it with PD arrays. Another high probability entry with risk-reward ratio of 6.44 without using PD arrays. Price goes up and delivers a structure break with a small fair value gap and a volume imbalance to return to. Applying the same logic as in the trade before, we enter in the fair value gap, stop below the ODR low, and the target will be the same as in the former trade, locking in another 2.93 risk-reward ratio trade with high probability. After finishing the ODR, price closes directly above and confirms the low of the ODR will be the low for the session. We are able to directly buy after the close with a stop below the 1 standard deviation and the high OIDR, and the same target as the trades before. And I know I repeat myself, another high probability setup with a risk-reward ratio of 1.02. Last but not least for this trading session, we reach the profit target from the trades before, and price action retraces beautifully back to the 2 standard deviation level and starts to climb again. Notice the precision around these levels. We see a structure break with a nice return into a fair value gap into discount, which we use to enter a long trade with a target new high and 3 standard deviation level. Price action continues to the upside and reaches our target and the standard deviation 3 level and grants us another 2.33 risk-reward trade. I think I don't have to say that every single trade I mentioned while explaining you the system and the logic could be fine-tuned with switching to lower time frames and using different ICT methods. Also, the targets could be more defined with PD arrays. So the real maximum potential of this trading session would be most likely way above the 23 risk units I calculated. What is more important, and that is the real deal of all what I just showed to you, is the following. All the trades I have shown follow a simple logic. You don't need a bias, you don't need to think about going short. You just follow a simple rule and enter trades with a very simple entry model. You have levels to place your stops and your targets, and every single trade has a high probability at the core. You don't have to be a super trader or have to have 22 plus years of experience to do what I just showed you. All you need to do is watch the first video and this video maybe much more than once. Watch ICT YouTube Model 2022 and then dive into your charts and train and backtest what I showed you. I can guarantee you, you will be profitable, and there is nothing, and when I say nothing, better out there than the combination of ICT models and my own model. So why I'm sharing all of that? I worked for 18 years in the industry and I'm trading for over 22 years now. All this time I did well for myself and the companies who hired me. I am passionate about trading, and I always was. And when I discovered ICT, it inspired me to follow him and help as many traders in the world as I can to create a better life for them and their loved ones. And hopefully one day they will also start to give back to people who need it more than they do. I guess that's all I have to share for today. I hope you liked the video and that I inspired you to jump on your charts to check what I showed you, because only watching this video will not make you a better trader. The information is now in your brain and now your neurons have to fire and wire together, and that is only happening when you train it in your charts. Good luck to you, talk to you soon, and know, I have much more to come.